I think when we think about trends in the payment space, there's obviously a lot of them, but one of the key trends that we've been seeing for a number of years now is really the dramatic rise of digital payment vehicles and the associated transaction volumes. And like many things digital, that's been accelerated in the last 18 months because of the COVID pandemic. We've seen contactless transaction volumes go through the roof. A lot of it has to do with consumer expectations, really. If you think about how people buy goods and services these days, in many instances, you don't even think about the payment anymore. You can buy a coffee through an app, you can get a car service through an app. And so consumers have really started to expect these very seamless, integrated payment experiences. And I think that's very relevant for retail banks because a lot of those experiences are being delivered by fintech, by neobanks. And so for retail banks, they really have to think through, how do we remain relevant? When you think about remaining relevant, it's making sure that you're actually funding and processing those transactions for your consumers, right? And so it's really staying abreast and keeping up with the innovation that's expected of the banks. And sadly, if you think about the ever increasing rate of change in the space, if banks look internally, many banks are actually realizing that they have a decades-old infrastructure, old code, very monolithic, millions of lines of code. And it's really, really hard to adapt to the trends in the market. And having technology that can be deployed in the cloud, that's microservices, architecture enabled and API first, things that are really easy to adapt. That's really what's going to be important here. At the end of the day, it's about being able to test and design and deploy new services for your consumers in a matter of weeks or months. And many retail banks today, that could be a process that takes over a year. And so it's really that agility that banks have to work on and have to look at when they think about modernizing their technology infrastructure. Whether it's CIOs or business operatives at retail banks, they see the trends that we're talking about. They obviously understand some of the operational benefits of maybe having, a cloud native infrastructure over a hardware on-prem infrastructure that's going to be much more costly. They get all of that, and we've talked about some of the reasons why. But first of all, I do believe, and we do see that the pace of change is increasing, and so it's becoming, as a result, harder and harder for banks to stay up with what's expecting, both from market and consumer expectations, also from regulatory requirements based on, with that old infrastructure. But I think the second reason is we really want to be top of wallet, and so the competitive pressure is also increasing. There are fintechs, there are neobanks that are delivering these delightful, more seamless payment experiences, and so now is the time for traditional retail banks to really make sure that they don't have their lunch eaten. And then lastly, I would say, because it is a risky endeavor, I think some banks were taking a wait and see approach. And we are seeing large retail banks now really embracing a cloud strategy and really modernizing their technology infrastructure and doing it very successfully so, with great results to show for it. And so I do believe that there's going to be many banks now following suit. I think we talked a little bit about some of the operational benefits, but for me, what makes a payment solution innovative is really that it's future-proof, right? There is a lot of things that are changing in the world of payments, and so you can pretty much put a solution in place, a payments platform in place that can cater to what we see today, but the world is changing and it's changing fast. And so if you think about what processing a payment means, it's authenticating the consumer, it's routing the transaction, it's then authorizing it. You have to be able to do all of these things in a number of ways and adapt to what's expected, right? Authenticating used to be a PIN code or maybe just an online ID and a password. But what about, biometrics? What about, Tim mentioned tokenization, right? You really have to be able to allow any kind of authentication, to route any different way. If you think about open banking and the opportunities that creates for banks to maybe route outside of the traditional international schemes, accepting new modalities and new ways of payments. What about crypto? What about peer-to-peer? I think that's, for me, what a innovative payment solution is about. It's really allowing banks to adapt quickly to what we're seeing in the market today, but also what's yet to come. And so that's what things like an API first architecture, microservices architecture will allow banks to do. You can't really prepare for everything, but what you want in your solution is a solution that can adapt to what is to come. Part of the appeal of new technology is also that there is a very attractive migration path for banks that really decreases the risk to move over. Diebold Nixdorf has been around for a long time and really understands the banking and the retail world, both through our hardware and our software businesses. I think based on our relationship with banks, based on our existing businesses, we really understood the pain point that banks are facing. And, honestly, part of what's the issue here is that you have a mature industry that's not moving forward with almost kind of reinventing and disrupting itself. So we saw the pain point and we're looking to address it and help banks really replace some of their old infrastructure with very modern technology solution that very few others in the market are really pursuing today or offering to their retail bank customers. So that's what we're trying to do here at Diebold and Nixdorf. It's an exciting new growth opportunity for us. And we are live with a number of banks that are seeing great results so far.